As a young man, I really didn't know what I wanted to do with my life. On my friend Mike's recommendation, I moved to Chicago and began as a runner on the trading floor. I eventually moved up and made bank trading size for one of the most respected firms in the world. In the dot-com bubble, things went south for me. The trader lifestyle caught up and I lost everything. Years later, I fought my way back, and I'm now here to help others on Trader Talk. All right, and welcome back, everybody, as we head into the afternoon on a Wednesday. And we're noticing that the term structure currently is very much normalized. Let's take a look quick at the charts here. Thanks to Kirk Duplessis for having me on his show. And I want to take a look at the term structure. Doing an audio interview, I want to pull up charts, which is hard to do, but now I can pull them up. So let's take a look at the term structure here. I like to go to VIX Central, and all right, so here is the term structure of the VIX on the side here, and let's see if we can make this a little bit bigger. And I'm not too badly in the way, but let me move myself over just a little bit anyway. And you can see that the futures are in contango. That means as we look across the chart here from left to right, the front month futures are cheaper than the farther out futures. And the relationship that we most care about is the one between the first two futures. And so I'm going to do, people who are familiar with the show will be familiar with this. I'm going to go ahead and I'm going to illustrate for you. Let's do a little cutout of this chart here. Okay, so if I get my little pen out here, this area right here, of course, is our area of potential. This is our area of potential as far as to make money to the downside and decay. So it looks like I had a different pen the other day. Let's go back to the blue pen here. And all right, so this area right here is our area of potential. And right now we're coming up on halfway through the expiration cycle, so that might be about like right here in our chart. So that distance is the space that we have to decay. And generally what's happening is the futures are generally falling towards spot. So over time, the futures are falling. Now remember, every day they have to sell one of these front month futures, or 1/30th the notional value of the front month futures, and buy the back month futures to replace it. That keeps a steady 30 days out, which is what the VIX ETPs have to maintain as part of their formula. So this area here is pretty wide right now. The difference between the two futures is how much gets rebalanced. So you're trading one of these for one of the higher price ones each day, and that's helping you sort of move up this curve here. So if we were to just sort of cut out halfway up the curve here, that would reflect sort of that opportunity increasing over the month. Because at the end of the month, all of these futures that were $13.95 or whatever number that's going to change, but whatever that number is, are going to be up higher here. And so your potential is increased to make money because of this stuff falling. It's not because somehow when you do the transaction of selling one future and buy another, it's not that somehow you're putting cash in the bank each time you do that. No, you're just increasing the potential for things to fall. We were sort of describing this on Twitter yesterday with Mike Listman and Matt Thompson. Anyways, so right now, contango up to 8.75%, which is fairly rich. The difference between spot and the M1 future right now, let's get rid of that, is so it's $13.95 minus $12.29. So it's around $1.70. So that's come in a little bit. What was almost $2 has turned into contango because this front month future has gotten pulled down a little bit. 8.75%, remember, means that per month, these things are decaying by 8.75%. So that's a lot. So although although the VXX hasn't moved all that much in the last few days, it is, more and more potential is building up here. So we will get the move at some point. We did get somewhat of a move today, but if we look at the last 5 days, kind of steady, actually going up a little bit last couple of days. Now we've gotten the move down. If you didn't know about contango, or you weren't following things closely, or you weren't watching the show, you might think this is a buying opportunity, but most likely we're going to move lower from here. But I remember a few days ago we were at 29. It hasn't really moved that much, but the potential is increasing over time for this to go lower. And the other reason why it hasn't moved that much is because the VIX is a little bit higher. The VIX was slightly lower. It was around 12 a couple days ago. But the whole time this stuff is breaking down and decaying. So I would recommend, if you're just starting out with this stuff, that you do wait for some sort of pop before you get on board. What would I do for a trade right now in the VIX if I was interested in getting short? Well, I would look at a put spread. Let's take a look at, let's go out far enough. You want to go out a little bit in time, because that way if you get a spike or something, you can weather the spike and have things go lower. If you have something like a week out and there's a spike, the spike might still be happening by the time your options expire, and that's not going to be good for you. So I would go out at least to this 19 OCC to do a trade, maybe even go out to NOV. So let's say we go out to NOV here, and we say, I would look at something in NOV like the November 31.27 put spread, something like that. So I'm clicking on the offer for the 31 put, and then I'm going to go hold control and click on the bid for the 27 put. So this is basically a $4 put spread, right? And you're paying $2.75. So you're almost paying $3 to make $4. So it's basically like a little over 20% return, 25% return. And it seems fairly safe to say that this could be at 27 or below in 79 days, because if we're around 8% contango, that's about $3 a month. 10% contango is about $3 a month that this would go lower, and we're saying 3 or 4 months from now it's going to be down $1.50. That seems pretty safe. So maybe you might want to even get more aggressive and do something like the 30-25 put spread. So 30, you buy the 30 put, sell the 25 put. Okay, so you could do that. Let's say you did that 3 times for a little over $1,000. So if you did it 3 times, if you did it 3 times, it would be a little under $1,000, $933 in buying power gone. And you are betting 3 to make 2 more. So that's a little bit better risk reward. Remember, as you lower your strike selection here, the 30-25 is going to be more profitable if it works than the 32-27, but the 32-27 is much more likely to come in. So it depends on how aggressive you are. I would suggest to you that you start out and just try this out, not being that aggressive. Maybe put an at-the-money strike. Or let's say we've got 79 days, so let's use the 28 strike. So you're going to sell the 28, so it only needs to go down 68 cents in the next 79 days. So you're going to sell the 28 strike and then maybe buy the 31 strike. Now this is going to, it's going to be a little bit less reward, but still you're betting 2.13 to make 3. It's still a great return over a couple months, and this is much more likely to come in than like expecting this to get to like 23 or 22 or something. So that's an example of maybe what a trade that I might use in my sample account here to get short the VIX. And I would wait, like I said, for a little spike before you tried to do this trade. These days, I like to use VXX more than UVXY, just because UVXY is an $8 stock, and it's kind of like, I know that once this gets to about 6, they'll reverse split the stock, as they usually do. And I know it's an ETP, but I call it a stock just for shorthand. Once it gets to 6 and they split it, I'll be much more interested in trading this one. Remember, UVXY is 1.5 times levered, so it's got a little bit more bang in it. But down where it's just single digits, it's not as enjoyable to trade as maybe VXX. So I'm going to stick with VXX for right now. And there's a trade idea for VXX. Anyway, I hope you're having a good day trading. I was watching Square today, really making a move up $5. Wow. And market seems up, VIX down, normal summer trading day. Thanks for watching. And I'm going to play my new intro once again because it's brand new as we exit today. So thanks for watching, and we'll see you next time. As a young man, I really didn't know what I wanted to do with my life. On my friend Mike's recommendation, I moved to Chicago and began as a runner on the trading floor. I eventually moved up and made bank trading size for one of the most respected firms in the world. In the dot-com bubble, things went south for me. The trader lifestyle caught up and I lost everything.
Thanks, Options Alpha.
Years later, I fought my way back, and I'm now here to help others on Trader Talk.